Good evening, everybody. All right, hope everybody's having a nice December evening. We had 4 inches of snow here in Pittsburgh a couple of nights ago, which is a big snowfall for Pittsburgh. Usually about a 1-inch snowfall is normal. But it's never gotten above freezing until today, so it's still got a lot of snow on the ground. So it looks very Christmassy out there. So, Becky, are we supposed to be doing any promos tonight? I forgot. Let's see, what do I want to do? Oh, we're starting off. Okay, no promos tonight. All right, so here's a promo that I'm not supposed to do. A lot of people have been asking about the 4th book that I wrote, which is Who is Santa and How Did He Get to the North Pole? And it's actually a true documentary. On how Santa got there. So we don't have an official promo for it since it's not an investment book. But here's the deal. It's available on Amazon. And if you buy it on Amazon, just email Abraham at Candlestick Forum and tell him that you bought Who is Santa and How Did He Get to the North Pole on Amazon, and give him your address, and he'll send you a free mouse pad. That's right. You know the fool of me. I know there's no Santa Claus. And so anyways, that's the promo for the night, Santa Claus book. So before I go into how we stand for the best sectors, we'll take a quick look. We'll come back to this. But here's what the Dow did today. Kind of traded at the low end of the trading range, still indecisive. But let's come back. I'll come back to that. So here is the logic. No, that's the reason I wanted to go to the Dow. If we think that we're in an uptrend, obviously if you're going to do your scans, you want to scan for the best bullish charts. So that's the first step in the common sense logic using candlestick analysis. If we think we're in an uptrend, then we go to step 2 and say, all right, what are the, can somebody help TN? Jim, can you help TN with his sound? Step 2, which is just if you figure the logic, there's all boats are going to rise in a rising tide. What we're looking for, the boats that are going to rise a heck of a lot faster than the other boats. So that tells us we want to find the sectors that are going to act the best in a bullish market, or the sectors that are going to act the worst in a bearish market, meaning most bearish. So we can go to step 2. As you can see, here's our full page, and here's all the watch lists that you can put on, and I'll go through how I use those as soon as we. Ron, this is. I mean, you could use this. This is a TC2000, and this is one of their oldest versions. And the reason I keep to the oldest versions is because everything's been kind of modernized, but I want to be able to show the components of how that modernization of how to scan, what the components were, what the logic was. So if this is my list of stocks, I use TC or Thinkorswim. I've got some over at Schwab. I've got a couple different accounts for different. How can I get the same scanners? The scanners that I suggest are either Warden Brothers TC2000 or Metastock. And with Metastock, not only do you have the scans, but you can add on all our signals and patterns, so you can scan for those specific signals and patterns. And they also identify when those signals and patterns come up. So let's see, what was I saying? Oh, okay. So step 1, we're looking for the direction of the market. So then step 2, we want to find which ones are the best best sectors. Now on TC 2000, you can see you've got all stocks, all indexes, but down here you've got the Morningstar industry groups. So I can scan those just the same way I would scan for stocks, which is there's the industry groups. Now I'm sorting them today by which ones had the biggest percent moves today. So it's sorted by, you can see it starts from which sectors and works its way down. So I can see immediately, well, toys and hobbies were good. Major airlines were good. Drugstores. So I can go right on down through and see which ones acted the best. There's aerospace and defense. They acted well. Now, that doesn't necessarily mean they have good charts. So when we click on this, we can see that chart looks good. It was a bullish Harami gap up in the toys and hobby sector. We can see we've got kind of a J-hook pattern setting up in the airlines, kind of a fry pan bottom in the drugstores. Now, this has already had a good move. I'm looking for something that's telling me they're just starting. So building materials are just starting. So here's the first method. If I can't find stocks, I'll come up here and say, all right, toys and hobby stores. Now, when I click on this, it's going to take me to all the components that make up that index. Well, looks like Michael's had a big day. Now I can go down through and see which stocks that fit into my parameters. I don't even know what 1847 go to you Decker. I don't even know what that is. There's Build-A-Bear. So I can go through and see which of these stocks look good. There's Hibbs, sporting goods stores, kind of good J-hook pattern. So I may click on these. Is there any equivalent like sector for TOS? You know, Harry, I don't even know because I don't use TOS for my scanning. Now, here's another facet that I use for when I'm scanning. A lot of the brokerage firms have charting services, and they've got scanning capabilities. But if you keep in mind, that the brokerage firms are not going to make their money by providing charts and or scanning stuff. So Thinkorswim, we have tried many times. I mean, it's, if you really zero in on it, you can eventually set up your scans and get used to it. But they're still not as, what do I say, as easy to use as something like Metastock or Thinkorswim. And for the little amount of money that they charge monthly, my suggestion is go to one of the scanning softwares, pay the extra $45 or $85 a month, because the time that it will save you will well pay for itself if you're a consistent trader, where instead of spending 40 minutes each night doing your scans, maybe with TC2000 or Metastock, it only takes you 15 minutes. So that time factor will add up pretty quick as far as saving you. Yeah. So Thinkorswim is all right, but it's still, you still have to be pretty adept at moving around. Are you on the screen sharing tab across the top? Oh, you were asking Alan. Linda, you can, yes, whatever is easiest for you. There was, I don't even know if it's still around. There used to be a software called bigcharts.com, and you could set it, those were free charts. Yeah, so more than likely, instead of trying to use scanning software, now I'm not saying don't use scanning software from a brokerage firm. It's just probably going to be a little bit more difficult to maneuver in. I would rather pay the extra $40, $50, $60 a month and have something that's very easy to use. Now, I use both Metastock and I use TC2000 only because I started using TC2000 back in about 2001 or so. And I hate to tell the story about how I first used TC2000 in Houston, that if I'd spent a little time to show how to set up the scans, I would go in. We had a SOS trading firm. That's the first where they started bringing the charts and the trading online. And so I was in an office. Each person was their own independent trader, but they had the software where you could trade online, and there was about 60 traders in the room, and it was in Houston, Texas. And I would go in on a Saturday. The air conditioning wasn't on in the building in Houston, Texas, and I'd sit there for probably 4 or 5 or 6 hours with nothing but my gym shorts on, which was not a pretty picture. And I would sit and I'd go through every chart. Well, then I sat down one night and said, well, there's got to be an easier way to do this. And so I realized there was different scans. So here's the scans that I use. Again, I go to the, number one, I can go to the different sectors. Or, number two, I've got a very simple scanning technique. See if I've got them on here. I can set up my trading universe, which is stocks greater than 5 and trading on average more than 200,000 shares a day. And that takes the trading universe from approximately 10,000 down to 3,400. Now, the reason I do that is because every time I put on a trade, I want to get as much leverage as possible. So that's either margining the stocks or buying puts or calls or whatever, but I want to get it leveraged. So I want to have stocks that I can margin if I want to. So I want stocks greater than 5 because most brokerage firms will not margin stocks less than 5. The next step is I want to have at least 200,000 shares a day because if I'm putting on a trade, I don't want to have to sit there for 5, 10, 15, 20, 40 minutes for the trade to get executed on a lower volume stock. I want to make sure that if I'm ready to close something out, I close it out, it's executed, and I move on to something else. Or if I'm ready to buy, I'm ready to buy without having to trying to get in over 10 minutes. So that's my trading universe. Now, out of 3,400, there is never, ever a time on any market day that I won't have 5, 10, 15, 20 good trade setups using the simple scanning techniques of candlestick analysis, which means I've got way more trades than I'll ever need. But that puts me in a position to say, all right, I've got 12 good trade setups today, but what are the best ones? And that's where you start being familiar with your fry pan bottoms, your J-hook patterns, your best friend signals, things that are going to produce the, no, it's actually 2,000. There's a decimal point right in there. So anyways, that takes my trading universe down to 3,400. Now, if the market had been selling off, and let me take a look here to depending on where the market is, see if I can illustrate this. If the market looks like this in the oversold condition, starting to head back up, now I can refine my search a little bit better by saying, all right, I want to find all the stocks that are in the oversold condition, which now I add just one more parameter to my trading universe. Stocks greater than 5, trading more than 200,000 shares a day, and with stochastics that are below 20. So they're oversold. No, 200,000 shares a day, Jace. Now, you can make your trading universe anything you want. If you like trading the low-price stocks, maybe you make your trading universe anywhere from 50 cents to $5. If you're an option trader, you just make your trading universe stocks that are optionable and that may trade more than 800,000 shares a day, so you got liquidity. So if the market is in the oversold condition and I can add the parameter that I'm looking for stocks that are below 20 stochastics, which means they're in the oversold area. So that means I'm starting to look for things like this. I am looking for stocks in the oversold area, and then I scan for the biggest percent price moves that day. And that creates a Morningstar signal on this one. So I can flag this, and I'm going to put this in my what I call my bucket watch list. So I can go down through and see which ones look good as far as a reversal signal. Now, there's something that looks good because it's done in the oversold area, sitting right on the 50. So I'll click on that. That's about all the evaluation I'm going to give to anything right now. There's another Morningstar signal, but it only traded 170,000 shares. Not good enough as far as the volume. So once I go through this, I can move all those that I've just flagged and say take the flag ones and move them to my bucket watch list by watch 6. That's where I'm going to put everything. See, is Ahmed, Jim, we got Ahmed. All right, now, right now, I don't use this technique of oversold. And why is that? That's because if the markets hold on, I'm trying to find the market. If the markets are trading like this, and it's been doing this for 2 months, and you are finding stocks in the oversold condition, what's that tell you? You're probably looking at stocks that aren't doing very well and probably are not participating. So I go back to just my trading universe and, whoops, wrong one. I just go to the trading universe and I scan those by which ones had the biggest percent moves today. Yes, this webinar is being recorded. So I'm just looking for the stocks that had big percent price moves. So I can go through at about this speed. Now, I've picked out some that we're going to look at later because I would look at this and say, all right, that's a gap up best friend. That's about all the evaluation I'll give it. I'll click on it. Here's another one, Zeus. I'll click on that. Not that I like it, it's just that I'm going to take a look at it again. Here's Arlo with a stick sandwich, one of the candlestick signals. So I go through at about this speed, looking for the stocks that have patterns, J-hooks. A lot of people in the chat room have been trading Revlon because of the fry pan bottom breakout and staying above the T-line. A lot of them have been trading this one, NNDM, because of the breakout and staying above the T-line. So if I see something new that looks attractive, I'll click on it and I'll look at it again. So once I do that, and I'm going to just speed up this process, I take everything that I've found that looks good and I copy it over to my watch list 6. And again, that's kind of my bucket watch. Now there's 49 in there, so I'm going to unflag everything I put in there. Now yesterday, when I did this process, I've narrowed down which stocks I wanted to look at. So today I come back and I clear those watch list 5 and watch list 4. And I'll show you I'll go through the steps why we're here. That's why we're here. All right, so there's another way to see which sectors are acting the best. And that's just very simple analysis. But if I'm going through my watch list 6, I say, all right, that one's had a best friend gap up. We know what the results of that one should be. If it opens positive, we're in a 45 degree. What time of day are you doing this? Harry, this is usually done after the close, which is sometime between 4:30 and midnight. I'm coming back and seeing which ones had the biggest moves and which ones look attractive. That one, I kept this one on here to look at just to show you why using candlesticks is effective for telling you when there's a change of investor sentiment. So that one's got a pretty good move, and it's probably in a 45 degree. I'm going to click on this one, a stick sandwich. There's kind of a J-hook pattern, and I'm trying to get to the reason I do this. As I'm going through the good-looking ones, there's a J-hook pattern in Western Midstream Partners. And I'm going to click on that. As I'm going down through this, there's SPR. There's a nice J-hook pattern. Now, as I'm going through this, there's some of the biotech still running. There's the pot stocks still running. And there's apparel stores that are acting well. There, we clicked on that one. There's kind of a breakout. This one I'll look at again because of all the elements that makes this a good reversal. Occidental looks good. Petroleum. Nordstrom's looks good. Retail. Well, as I've gone down through this, ACB, another J-hook pattern setup. Jemiah, we recommended this one because of the J-hook pattern, and it still can be bought on a positive trading tomorrow. But now what we can see just in this amount of time is we've seen 2, 3, 4, we'll get to them. And I might not even have some of them on here. But we're starting to see a lot of oil stocks having very nice patterns. We're seeing retail stocks. Now, as I say, we're seeing them. It doesn't take too much time to say, all right, if I'm doing scans and I've looked at 27 or 30 different patterns or charts, and I can see there's 3 or 4 oil stocks, and I can see there's 3 or 4 retail stocks, I can pretty much make an assumption that the oil stocks and retail stock sectors are probably acting pretty strong. Yes. So if you're having problems with connections, there's a little red circle up in the very top right hand of your screen with an X in it. Just click on that and then come right back in, and sometimes you get a much better connection. Okay, so as I've gone down through this, and I don't know how many I've done, Snap, I don't know. There's another aerospace. So I can already make the assumption that there's about 3 or 4 sectors. There's a Northern Oil, a J-hook pattern, and a potential doji sandwich breakout. Valero, same thing. So it doesn't take very long to kind of figure out, well, these are the stocks, or this is a sector that's getting a lot of attention. So once I've done that, and I guess we're almost there, I come up here and I say, all right, take all the ones that I've just flagged and move them up to Watchlist 5. All right, so when I do that, now I've got 16 stocks in Watchlist 5. Well, obviously, still, is the chart a 3-month daily? The chart can be anything you want to make it. You can make it like this. I just make it pretty big right here because this is what I'm looking for, is to see what is happening right now. So it doesn't matter what your time span is. It's just what can you easily see over here. So I want to make it big enough to say, all right, these are good. That's a good time frame. And I also want to see what's happened here recently. I can go back and say, all right, we've had this type of move. But I've got 15, was it 15? 16 on my on this list. Now I know, or if you know what happens after a best friend signal, it implies there's more upside. So, and one thing that I've been advocating to people is there's about 16 or 18 what we call top rank signals and patterns. And some of those are a combination of a candlestick signal and a pattern. So you've got the top one on our list is what we call the best friend, and that is a doji followed by a gap up, especially coming out of the oversold area. You've got the J-hook patterns that has a strong up move, pulls back. We can see our bullish engulfing J-hook pattern. This provides a very high probability that wave 3 is going to be the same magnitude as wave 1. So if we've got 18 good bullish signals and patterns, a lot of people say, well, that's way too much to kind of learn all at one time. So the answer to that is pick out 3 or 4 patterns. If I was doing the best signals and patterns, I'd be doing the best friend, the kicker signal, the J-hook pattern, and maybe the fry pan bottom breakout. That doesn't mean I wouldn't learn the other ones, but I'd become an expert or become very adept at those, because that puts you in a position where you don't have to be directed or wonder what to do as far as when you see those chart patterns. You know exactly what to expect for them to confirm. You know exactly what to expect to maintain that position, and you know when to close out that position. Now you're not at the mercy of the markets or everybody's opinions. You can see exactly what's happening as far as investor sentiment. And the reason those patterns work so well is because of human nature. Prices move in patterns because investor sentiment works the same way time after time. And as I showed in the afternoon, or on the YouTube this afternoon, an added benefit of knowing a pattern is threefold. One, first of all, it tells you with a high degree of probability which direction you're going to move in. Now, remember, most investors have a hard time even figuring out which direction a price is going to move. They're hoping that it's going in the right direction. We've got a lot more evidence of which direction a price is going to move based upon its pattern. Number one. Number two, the magnitude of that move is usually going to be much greater than just merely an uptrending stock during an uptrending market. And then the third part that really should be included in this is that when you see a pattern, and because it is the buildup of investor sentiment, that if the market all of a sudden turns hard the other way, a pattern usually takes an extra day or two to change that investor sentiment. Gives you a little bit more time to come out of that trade with most of your profits. So as we're going down through this, I can start seeing which sectors are producing the best probabilities. This is what I'm having trouble with. I signed in for Candlestick Forum and can't do anything when I sign in. No training video, ebooks, nothing. Guy, if you have problems, just email abraham@candlestickforum.com with that. Oh, that was for Jim? Okay. Anybody that's a member and you're having problems with getting information, just email abraham@candlestickforum.com. Tell him what your problem is, and he'll get you straightened out. Okay, so anyways, so there's two ways to scan for the best sectors. That is, one, go to the sectors themselves and see which ones have acted the best. And if you see a good sector, then you can come up here and say, all right, what are the components of that sector? Which ones had the best price moves, and which ones can I go after and see which ones have the best patterns? The second element is just a simple scanning of which stocks in your trading universe had the biggest percent price moves. That's not what I wanted to do. And you can start clicking on the ones that look good. Oh, here's what I was trying to do here. Was let's say I like this one. Let's say this one looks good. This one looks good. We're already in the some of the hot stocks, so we'll just hang on to those. This one looks good. Now I'm going down through here, and this one looks good. Occidental looks good. So I'm not doing very well as far as narrowing down which ones look good. Jamel, we already, or Jemiah, we already looked at. We recommended ECPG because of the bobble breakout. A bobble breakout is just a more defined J-hook pattern where you can see where it failed right at the 50, a resistance level. You can see where it pulled back to, the T-line, which is our natural support level. And then it came back up through doing a J-hook pattern, breaking out through this level. The reason your charts are far off, Art, it's probably your charts are probably off to the right. There is a little box up at the top of your screen that has arrows pointing in and arrows pointing out. You click on one of those and that will get your screen to look better. Now I forgot what I was saying. Oh, so a bobble is even a more defined J-hook pattern, and it has more probability aspects to it because we can see the T-line, but nobody has the T-line on their chart. So when it comes back and supports at the T-line, we can see that it's supporting that what we know is a natural support and resistance level of human nature. Nobody else is watching that, but we have that added benefit of using it. But then when it comes back up through the 50, everybody is watching what's going on at the 50 and the 200. So when they see it break out, we can see that if it does break out, we want to be buying immediately. And when it does break out, everybody that's watching what's happening at the 50 starts coming in and adding to our profitability. So let's see. So that one we already own. This one looks okay, but I'll give it a little bit more time. And this one looks okay. So what I've done now is I come up and I take the ones that I've flagged and move them up to my watch list 4. So now on watch list 4, I'm down to 8. And I go through the same process. Now this process is based upon knowing which signals and patterns of candlesticks work the best. So this one's a gap up. I'd be buying this if it starts trading positive because we're more than likely going to get a 45-degree off of here. West, I'll flag that one. This one I'll watch because I think there's something better. Capri looks good as far as a retail stock. This one I'm going to click on again because of the bullish confirmation after they gap down, did hammers right smack dab on the 50. What's this implying? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. And then Occidental looks good. This one also looks good, but we already bought Jemiah. And this one looks good, but we already own TLRY. So now I come up here and I say copy all the flagged ones up to watch list 3. And so when I go up here to watch list 3, I'm down to 4. Now, if I'm putting out a recommendation for everybody tomorrow in the recommendation area, I'm unflagging all of these. And I might say this one, like this one, and I'll probably take this one. And those will be the recommendations for tomorrow. Now, what do we want to see on a recommendation? We want to be buying this one on bullish confirmation. If it opens down here, that's not telling us the bulls are in control. We're going to kind of leave that alone for the day and not do anything with it. And let's say hypothetically, this one opened lower and didn't do anything. And this one opened positive and we started buying this one, but we wanted to buy 2 and we only have 1. Well, now we still have a 4th one to look at, Occidental, to see if it's opening positive. So if these other 2 didn't work, I've got more to look at. Now, for some reason, let's say none of these worked. Now we just flip back down to watch list 4, and there's a few more on here that we can go look at to see if they're working. And if there's none that looks great on there, you flip down a little bit more, and you've still got more supply of trades that tomorrow, if they open up, might be this one. The stick sandwich opens positive, coming out of a fry pan bottom. That might be the likely one to go after. All right, we're going to move over to live charts. But before we do, is there any questions on how to go about scanning for the best trades? I guess if I was going to put it in order, first of all, you want to know the signals. Secondly, you want to know which patterns. And then learn a few. What time do you start looking at your picks in the morning time? Bobby, as the market is getting ready to open, you'll have a lot of, let me pick out one. You'll have a lot of, especially the over-the-counter stocks. Let's say we're going to be, in this one we'll be recommending going short because of the bearish double doji after failing up here. This is overstock. But if this opens lower tomorrow, we're going to be shorting it right away. Yes, I've got bearish picks. So you do the process the exact same way, and I should have gone through that, that if I'm looking for the best bullish trades in my trading universe, and I've done the price scan to find which ones have had the best positive trading, I can come up here and click on this arrow and it flips the list. Now I can come up and say, all right, I'm looking for the ones that have the best bearish trades. So Splunk, big gap down, probably too far away to do anything with. CNK, I've already got this on the list to look at later, but look at big bearish engulfing, closing right at the 200. If this opens lower, it's probably heading lower. So I can do the scans just the same way. Here's Land's End, a retail store, but it's gapped down, probably bad earnings. Data, same thing. So I can scan and look for the trades that have now the best sell signals. There's a bearish engulfing that failed right at this level. So I can make up a list of the ones, and then I put them all on my sell watch 6. Now I can go back and say, all right, which ones of these look like the best ones to short on weaker trading? So I've got a list of those. Whoops. What version of TC? BJ, this is an old version. And it's because it's hard to teach an old dog new tricks. It's all been modernized or updated. The reason I keep the old version is so that I can show how those scans were developed. Is looking at a heat map sort of the same as scanning a sector? Oh, Linda, I guess so. Again, that might be the new modern or more updated aspect of showing which ones are showing the great strength or the greatest weakness. Do you set up buy stops? You can do that, Ron, yes. So if I was buying Jemiah tomorrow, but let's say I couldn't be here on the open, that I'm driving to work or going to play golf, I might say, all right, this one closed at 13.24. The high was not 13.24, 33.34. The high was 35.11. If it comes up through 31 or 35.15, I want to buy it because that tells me my pattern is working. So you can set up buy stops. Now the other side of the coin is you can also set your stop losses much easier using candlestick analysis than anything else, because we know what to expect based upon what our chart is telling us, and we've got the T-line. Very simple rule of the T-line. You can stay long until you see a sell signal and a close back below the T-line. So if I was buying this at 35, what did it say, 33, I forget what numbers, 35.15, and then all of a sudden the market turned around and it closed back below the T-line, I'd stop out because that negated the reason I was buying it, the J-hook pattern. The pre-market activity done is doesn't become relevant until probably 5 minutes before the market opens. Because you can have something like Apple that trades 14 million shares a day or whatever, and it could move around all night long. But it might move around all night long on 20,000 shares. So it doesn't matter what the price is doing until everybody is putting in their orders, either buy or sell, just before the open. Metastock is similar. It works very well. The difference between Metastock and TC2000 is TC2000 will give you charts on American stocks, whereas Metastock will give you charts on anything you want worldwide, whether it's stocks, Asian stocks, Canadian stocks, any market, or currencies, commodities. They've got everything on there. So it's much more, much more active for or relevant for somebody that does trading in all areas. There are 50 to 60 different signals and patterns in the candlestick universe. The stick sandwich is one of them. Now, we have what we call the 12 major signals, and that is just the process of over the last, I can't imagine, 40 years? Oh, I'm only 39, so how can it be 40 years? I forgot what I was saying. So when I first started learning candlesticks, I wanted to learn every single one of them because I didn't want to miss out on any good trade setups. But as I went through, one of my learning processes was, see if I can find something that would be relevant. I would say, all right, were there sell signals up here when this sold off? Oh, there's a bearish engulfing signal. I'd go back to my list at that time of signals. Say, oh, there's a bearish engulfing. There's an inverted hammer. There's a hanging man. And then what I discovered was, as I went back through these charts and said, all right, what happened at the bottom? Was there signals there? So the logic was, if the candlestick signals work, we would see signals at the reversals. And then I started seeing that out of the 50 or 60 signals, there was only 12 that you really saw. So through the years, I discovered that those 12 are probably going to be about 99.9% of all the signals that you're going to see at the reversals. So instead of spending a lot of mental time and energy trying to learn all of them, my suggestion is you learn the 12 major signals. Now, when you have time and you're just goofing around, sitting and watching your trades, you can flip through, I think I've got them in both or all three of the books, where you just go back through and you might, about every 2 or 3 months, I just peruse back through to see all the signals. Not that you have to learn them, but just recognize that they're signals so that if you happen to see one, that you know what to do with it. So narrowed down to the 12 major signals, those are the ones that are going to make you all your money. Those are the ones that are going to occur all the time. Now I forget what the... to do the scanning, is it true you could pay? Yeah, depending if you're just a swing trader like myself, where my trades are going to last anywhere from 2 to 10 trading days, yeah, you can just do the end of day if you want to. But I think, and I haven't had to buy it for years, I think the live trading from TC 2000 is now only like $45 a month or something like that. There is usually a lot of retail investor noise in the opening minutes. So how many minutes after they're open do you let pass to see if a stock is heading in an upward direction? That's one of the training sessions we do for the members area, where we go through the 4 different quadrants of when to buy. If the market's opening positive and your stock is opening positive, I might buy within 90 seconds if I can see they're still buying. If the market's opening lower and your stock price is opening higher, the one that you're thinking about buying, I wait a little bit to see if the lower market trading is going to kind of stall that move. If the stock you're looking at is opening lower but the market is opening higher and you're anticipating bullish move, you don't do anything until it comes back up through the previous day's close, which means it's producing another bullish candle. And then if the market is opening lower and your stock is opening lower, just say, oops, not time to be buying today. So I usually do about 80% of my buys or trades within the first, let's say, 45 minutes of the day. I do another 15%, usually in the last 15 minutes of the day, which is if something doesn't look like it's, or it looks like it's doing a sell signal or not confirming and I bought it, I close it out. And then that leaves about 5% during the middle part of the day where if you see something big happening and it's creating something that tells you to get in. So that doesn't happen very much, but most of my trades are done within the first 45 minutes each day. As a swing trader, do you use real-time data streaming service to help assist? You can, Nick. Let's say a stock that you are planning on buying. I'm trying to see if is opening a little bit lower, but the market's trading higher. I'll flip to my 10-minute chart and see, and that's how we take profits on a lot of trades that are way out of the range. And way out of the range means the further away you move from the T line, the higher the probability it's going to come back and test it. Now we did that, if I can pull this up, a while back, whoops, right over here. Let me see if I can make this chart. Hold on, I'm going to go to live charts. Hold on for a second. Oh, there it is right there. We'll see it better live charts. Jim, let me see if I can slide this over. Is that what I want? No. Hold on. I'm going to turn off the projector for a second and reformat it here. Okay, that's not what I want to do. I want to do this. Okay, so using our very simple rule of the T-line, well, that ain't a fine, there it is right there. So this was a case where we'd recommended Tesla. A few people in our options room had the calls, and remember, simple rule of the T-line, as long as it doesn't close below the T-line, you stay long. But the caveat is, the further away you move from the T-line, the higher the probability it's going to come back and test it. So how do you keep from giving back a lot of profits, sell signal that was here and then opened here? Very simple. That if we know that we're starting to see exuberant buying, because that's where the Japanese rice traders have pretty much told us that when you start seeing exuberance at the top, get ready to start taking profits. Well, we don't have if it was trading up here, it opened here, and it was trading up here, we don't have a sell signal. But what is our warning? Look how far away we are from the T-line. So when that happens, we flip to our 10-minute chart. And as long as the 10-minute chart stays above the 10-minute T-line, we're still good. But as soon as it started trading with a sell signal and a close, or on the 10-minute chart coming back down through the T-line, we're taking profits up here. Again, why without a sell signal? Because we've got the alert that the further away you move from the T-line, the higher the probability it's going to come back and test it. What is the sell signal? Well, eventually the sell signal was a doji in the overbought condition, and it opened lower the next day. So instead of getting out here, if you'd gone by just the candlestick sell signal, the doji, and then the lower open, you would have gotten out here versus getting out up here. So what this is pointing out is what the Japanese rice traders kind of illustrate for us graphically, is where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. We can see when that's happening and get out much earlier. All right, I'm going to take a look at a few of ones that we already own, because obviously they are the best charts we can identify. Why is this not working? Well, shucks butts. Am I on the wrong? There we are. Okay, so let's go back to the markets. We can analyze the direction of the market just as easily as we can analyze a direction of an individual stock. For example, what's it telling us right now in the Dow? We're still in a very slow uptrend, and it's choppy, but it's still trading above the T-line. That pretty much indicates we're in an uptrend, obviously, but not a very convincing uptrend. The other index, the NASDAQ, you can see what it's been doing. It's been staying above the T-line. Today, I think it closed at an all-time high. but look how indecisive it is. Now, the reason to say it's in an uptrend but indecisive is a little bit of a warning, because if it's trading up indecisively, meaning you can see how the signals are all dojis or little trading days, that just puts the market in a condition that if there's any bad news, they can slam it pretty quick because there's not compelling buying going on. Same thing with the S&P 500. It's in a slow uptrend, but it's still very choppy or very indecisive. So a lot of people say, well, why do you use something like the Dow? There's only 30 stocks in there. Because that is the measure of investor sentiment. Anytime somebody says whether the market's up or down, they're talking about the Dow. So it's not like you're analyzing the whole market. You're analyzing what investor sentiment is indicating. So with that, when we did our scanning over the last few weeks, we're finding stocks that are in steady uptrends. Now, we recommended AROC today because of the bullish flutter kicker signal. Now, one of the strongest signals we have is a kicker signal. And a flutter kicker signal is just a more defined kicker signal. It opened here and closed here. Let me make this bigger. And then they gap it up at the previous day's open and did a doji. And then they opened positive. What's our doji rule? The doji rule is it's going to trade in the direction of how they open after a doji. So it traded positive, which meant if we took out this little flutter, we essentially have a kicker signal, which again is our strongest signal. And what type of pattern is it setting up? A little J-hook pattern. So we're essentially putting ourselves in situations where we can identify the pattern based upon investor sentiment. We are buying Kirkland because of the fry pan bottom, and this is what we call convergence analysis. This very simple logic, which is basically any of the analysis. Could you look up the oil? Hold on. I'll get to a lot of the stuff here in a second. Does the 50 EMA and the 200 EMA give you any kind of overall direction of the way the particular stock is trading? No. We're not using the 50 or the 200 EMA. We're using the SMA, the simple moving average. And we're not using it to make our decisions about our trades. We're using it to see what everybody else's decisions were at those levels. Every major money manager around the world uses the 50 and the 200-day simple moving average. We have the visual capabilities of seeing exactly what their decisions are at those levels. So as you can see, there was a double bottom here with a Morningstar signal, a Morningstar signal. And this was a Morningstar signal and a close above the T line. And we can see there's a fry pan bottom. And we know how long we can stay long on this fry pan bottom, as long as it doesn't close back below the T line. Jace, I can scan anytime. If I'm getting ready to look for stocks in the to buy for the next day, it's done at night. But let's say I've picked out a list of stocks and I'm getting ready to buy in the morning, and I can see the market is slowly moving up. I can click my scans, refresh them on the list that I've been looking at to maybe buy, and do the same scan. Which ones have had the biggest percent price move so far today? And I can see whether there's a best friend signal, a doji gap up. I can see which ones are acting the strongest by scanning maybe 20 minutes after the market opens. Sebastian, I don't know why you're getting kicked out. Are you coming in off a iPhone or something? So we recommended this one. Look at your big morning star signal, then your gap up, and now you've got kind of a J-hook pattern setting up. And what's the one element that we can see? Yeah, if you're doing it from a phone, you might not have as good a connection. Are you near a laptop or a computer? So what's our criteria for staying long on this one? They've never been able to close it below the T-line. What was our criteria for starting to buy the pot stocks? Because there was kind of your gap up. Notice it opened here, closed here, gapped up. Kind of a not quite a kicker signal. But you had the fry pan bottom. And how long do you hold on to this one? As long as it doesn't close below the T-line. Now, I've pointed this fact out many times, so if you've heard it before, you'll hear it again. The reason the T-line has to be, and soon to be, so effective is look where it trades a lot as a natural support level, right at the T-line. Look at the low of today, right at the T-line. Now, why is that significant? Because nobody has the T-line on their charts, which means they're not waiting to see if it's coming down to hit the T-line because they don't have it on their chart. Since nobody has it on their charts and it hits that level that we put on our chart, the T-line, that tells you that is a natural support and resistance level of human nature. So the most powerful statement that I usually make about candlestick analysis is if the candlestick signals are the graphic depiction of what is going on in investor sentiment, and the T-line is a natural support and resistance level of human nature, when you combine those two, you've got an excessively powerful directional indicator that tells you when you stay long, even on a bad hair day, as long as it doesn't close below the T-line, you stay with it. So the oil stocks started coming back. We started picking up whiting a while back. And as it came up here, it did a J-hook pattern, telling us more upside. Look where it used a low today, right on the T-line. This is not magic. This is just the elements of human nature that the Japanese rice traders provided us with the information that told us what signals, what the signals were telling us. So we used Jumaya. We recommended it today if it opened positive, did a doji. It still would be recommended if it opens positive tomorrow, because what's that 2 plus 2 analysis? First of all, you've got the potential of a J-hook pattern, which is the prerequisite of a J-hook pattern is a strong price move. Pulls back right to the T-line, does a piercing signal. Now if it opens positive, what do we got going on? The doji rule. It's going to move in the direction of how they open it after a doji, number one. Number two, if it opens and trades positive and creates a candle like this, your doji sandwich, it's further confirming your J-hook pattern, which tells you wave 3 is starting to be equivalent to this. So this is just adding the different elements that we know have high probability results to be in not only correct trades, but very strong correct trades. ACLS, another one, that buying off of this J-hook pattern, very simple. All we had to do is stay long as it didn't close below the T-line. Same thing with ocular. This is what we call a steady eddy. And once they broke out, there's your doji sandwich. Then how long do you hold on to this? So you see a sell signal and a close below the T-line. This is not rocket science. This is using the most consistent indicator in the world, and that's human nature. Now, on our shorts, same simple logical rules. If you're There's your big bearish engulfing signal. You go short. Now you're getting down toward the oversold area. Where is your safety stop? Your safety stop is at the previous day's open. Because logic says if you're getting down toward the oversold area and they have enough strength to come up through that level, close it out. The bulls are in control. Let's see. I have something to illustrate on this chart. Another one. There's your big fry pan bottom. Where was the place to take profits? Look how far away you were from the T-line. On that day, when you were up here, already alerted to the fact that they were gapping it up in the overbought condition, and you move that far away from the T-line, very simple process. You flip to your 10-minute chart, and as soon as it came back down through the 10-minute T-line, you take profits. Why? Because more than likely it was going to come back and test the T-line. Now what do we have setting up? You can get ready to buy back on a J-hook pattern. Does the whole candle have to be below the T-line to indicate a sell signal? No, a close. Remember, the two important facets of a candlestick signal is where does it open and where does it close. It can trade below the T-line during the day, but if it doesn't close below the T-line, you stay with it. Yes. So now on this one, never close below the T-line. If I took profits up here, I'm waiting to see what happens back here at the T-line. Now we've got a bullish candle. Get ready for a J-hook pattern. Why? Because this is what we call the classic pattern. What do we expect coming out of a fry pan bottom? A very strong price move. What do we expect for a prerequisite for a J-hook pattern? A strong price move, then a pullback. What should we expect from here? Well, if this is wave 1, wave 3 has that same probability. We're shorting GSX because you can see the slow rounding curve. If this opens lower, what do you have going on? A bearish doji sandwich. And what do we know about the doji sandwich? There's going to be more downside. Nick, I'm glad you asked that, and I'm not going to pick on you, but that is the normal question. Is this stock, from where we bought it, has gone from maybe 11 to, where was it, 19. Now, this is why we advocate candlestick analysis, because where do most people buy? They buy at the wrong end of a trend. So I always tell people in our members' chat room during the day that if you're asking whether you should be buying here, what are the things that would tell you you don't want to be buying here? Well, first of all, you're up 80%. Secondly, you're in the overbought area. Third, if you're looking at stock that's already had a huge move, what should be the first thing that goes into the back of your mind? Where should I have been buying? Whoops, there was kind of a doji sandwich breakout bouncing off this the 50. That's where I should have been buying. Or there's a J-hook pattern. There's where I should have been buying. So instead of chasing after something just because it's moving well, what you should be doing is saying, all right, what type of pattern setups tell me that's when I should have been buying? So I'm not saying that to pick on you, Nick, because at least once a day people are asking, should we be buying here? My answer is no. Go back and see where you should have been buying. This is what reverses. Now, I say this is what reverses bad investment decisions. I was the worst investor in the world. I was a stockbroker for 8 years. So that makes you kind of concerned about clientele out there that had the worst investor in the world advising them. And where do people have a hard time buying? When everything looks bad. And the way I learned how to turn my investing around was I could see when I was the seller And I always say to myself, how come when I sell, it immediately turns around and goes up? Or how come when I buy up here, it immediately goes down? That's because that's what people normally do. And I thought very simply, if this is where I should be selling, I just need to turn my decision making around 180 degrees. Instead of when everything looks terrible and I see buy signals, that's probably the smart money buying, and I want to be where the smart money is buying. Yeah, stochastics are 12.33, and that's nothing set in stone. I just sat down one night about 35, 40 years ago and said, all right, I'm a swing trader. I think at that time the common one was 14.55, and I just kind of sat there and said, well, let's try 14.31. Let's try 12.42. And after about 30 minutes, I came up with 12.33. And that seemed to work pretty well for showing the bottom and the tops. Nick, that is the other thing you need to make a decision about, or a logical decision. If you got stopped out somewhere and you're thinking of getting back in, the first decision you should say is this the best place to have my money? Or am I just trying to get back in because I sold and it's still going up? And my ego says, oh, boy, that's bad. I did that so many times. I jumped back in, and usually when I jumped back in, it was a time that it reversed again. Now if I stop out and I see it going up, I have to say, all right, I took most of that profit. Now I want to go back and find a chart that looks like this. Should an average daily volume be considered when deciding to enter a trade? Bernard, I've already eliminated that decision process. All the stock or all the trade setups that I'm looking for, I know are already reached the parameters of the volume that I expect, which is about 200,000 shares a day. Corey, that same question should be, why don't more people use Bollinger Bands? Why don't more people use whatever else you can think of? Because a lot of people don't even know about the T-line. And it's not anything mysterious or secret. And that was one of the things that for the last 20 some odd years that we've had the website up, is we couldn't promote by saying, learn the new secrets on how to trade, like all the promo stuff that you usually get on your email, because there is nothing secret about candlestick signals. They've been around for hundreds of years. The only thing we need to do is learn how to use them effectively, or learn how to use them correctly. How many down candles before a J-hook becomes invalid? Boy, usually it's more on a basis of how far back does that J-hook pattern come to. And again, the T-line is a very effective measure. But if it comes back to the T-line and starts back up, that pretty much tells us that natural support level is, again, acting as support. So we've also, now, here's where I've jumped the gun. Today I closed out my short position because look at your bearish flutter kicker signal on Goose. And it started trading up above this level. I closed it out because the probabilities were going against me. Now it came back down. It's probably still heading down. So my question is to myself, do I want to short this again? But where is it right now? It's already in the oversold area, and it had kind of an indecisive signal today. Am I better off trying to jump back in, or am I better off going and finding another signal like this? So remember, if you just keep out of your mind that you're not going to, and I'm not trying to buy at the absolute bottom. I'm not trying to sell at the absolute top. I'm trying to get the fat part in the middle. The more correct trades I have, bigger, and I say bigger, your returns are going to be huge on the compounding effect versus trying to figure out how to buy at the very bottom and sell at the very top. That takes the probabilities of being in the right trade out of your hands. Now, we shorted UPWK, but I covered it today because it was trading up above the T line and the market was trading up. Now, this one is in the oversold area. So if this opened lower tomorrow, I'd probably re-short this one because we still didn't close above the T line. We're still probably on a downtrend. And so let's take a look at the biggies. A lot of people like to trade the biggies. Apple. What can we assess from this? Kind of a scoop pattern bouncing off the 50. We're in a slow 45-degree. But there are times when you don't want to trade any of these. Because look at Amazon. Which direction is Amazon going right now? Absolutely nowhere. And Tesla. That's got a little J-hook pattern. Notice where it broke out. This is what we call the message. That's another very simple to use pattern. Even though it gapped up, red candle, not good. But what was the message? The message was a lot of buying. And then there was profit taking. So what do we look for as a candlestick signal? When is the profit taking over? That message told us there was a lot new, powerful buying force coming into that trade. We just had to wait for the profit taking to end. Now Tesla, how long do you hold Tesla? You might have taken profits here, but right now it told you they aren't closing below the T line. Stay long. Did you make money on Goose? When I make money on something, I take it. My watch list, so I can't see it. I made just a little bit of money on Goose. Now, I know that when I put on a trade, I've probably got about a 70% probability that I'm going to make money with that trade. Now, some of that profit on that trade might be 0.3%. Some of them are 300%. But I know I'm probably going to make money. Now, the other side of the coin that really killed me that I didn't address for a long time was that even though 70% of your trades are profitable, that seems pretty good. But if you don't know what to do with the other 30%, you're going to hand back the profits you made on the good trades. So, and I hated to close out a bad trade because, boy, does that chew up your ego. Sitting there thinking, man, did I analyze this wrong? Am I stupid? What's going on here? Then I realized that 30% of my trades aren't going to work. It's nothing as far as bad analyzing. It's because of market conditions. So if I put on a trade that I expect to work and I see it's not working, I don't take it personally anymore. I just say, oops, that's part of that 30%. Let's close it out and move on to something else. Tesla, you could be buying this one. Now, I wouldn't buy it here because that was way up here. But I would buy it here because that tells me a J-hook pattern's in progress. And the target would be wave 1, wave 2, wave 3. Bob, I trade both. In my options account, I trade options. In the stock accounts, I trade stocks. I am way past time, and we haven't even started on some of the good ones. Do we want to end it here pretty soon, or I hate to have people fall asleep at their desk? I didn't realize we've been going for an hour and a half already. Let me try to go through a lot of these real quick. The J-hook patterns. The J-hook pattern here on Riot. Doji right on the T-line. Still heading up. But the J-hook patterns Whoops. How can I go quickly if I can't spell? There's a J-hook pattern. There's a classic pattern. Fry pan bottom, J-hook. So the J-hook pattern is one of your very informational trades. You can see the little J-hook here on Monera. Now you can see another J-hook pattern. That's right. But yesterday, if you were alert, you would have watched the Steelers winning their 11th game in a row this season. ARCT, kind of a J-hook pattern. What did it tell us? The T-line's not being breached. There's a J-hook pattern using a Morningstar signal. This one can be bought on positive trading. But the obvious J-hook patterns are over here in the oil stocks. Wes, Occidental, Apache. I had a bunch more, I think. PAA is an oil pipeline. J-hook pattern. And this is what we call convergence analysis. Look at your left-right combo. Left-right combo is a doji followed by a bullish engulfing signal, a very strong reversal signal. And look where they did it, right off the 200 and the T-line. What do we expect from this? Wave 1, wave 2, wave 3, more upside. And that's another J-hook pattern. And what did it do? The common trading aspects of human nature, which is they come up through a resistance level, and they'll come back and test that resistance level to see if it's going to act as support. We can see immediately that it's acting as support because after it sold off back to the 200 and the T-line, it did a bullish harami. And what's the bullish harami tell us? The selling has stopped. We can start buying on that J-hook pattern. Core, there's another kind of J-hook slow curve. Where's your next likely target? It could get up here to the 200-day moving average. Hold on to your individual ones. Let me get through this. Yeah, the Ravens were in bad shape. What if the close is a few cents below the T-line? Tony, if you have something that you can obviously see has been up above the T-line, and let's say on any given day, let's say it closed just below the T-line here, I'll give it one more day. But my rationale or my strategy is it has to open positive and trade positive to stay in it. If it opens lower, close it out immediately. Now, if you're way up in the overbought area, and you see a strong sell signal, and I say a strong sell signal like a doji gap down, and it closes just below the T-line, I'm more apt to close it out because of the strength of the sell signal. Now remember, the top priority of any decision making is the signal. Everything else is merely a confirming indicator. This is getting junky. So even if it's junky, it's a fry pan bottom, I would still stay with my same criteria. I would stay long as it doesn't close below the T-line. I've got a few. That's a stick sandwich. Big up day, big down day, big up day. Now, this is also coming out of a fry pan bottom. And what usually happens after a fry pan bottom? Big whipsaw. That can be bought on positive trading. We've got people in the chat room that have been riding along with Revlon. You can see the slow curve, J-hook type pattern. All you do is stay long as this stays above the T-line. ALT. Kind of a J-hook pattern setup. The typical. Broke through the resistance level, came back and supported up all the resistance levels. The 200, the T-line, the 50. I'd be a buyer of this one on positive trading tomorrow. American Airlines, another one that supported right smack dab off the T-line with a bullish engulfing J-hook pattern. Oh, there were the oils. All right. So oil stocks, J-hook pattern on OMP. What else do I have here? Let's see. And gel. You can see where that J-hook pattern is starting, right off the 200. Very high probability wave 1 going into wave 3. And we can see the same thing in some of the retail stocks, like Guess, bounced a bullish harami right here at the T-line. Remember, the signal is the first criteria, then you add everything else to it. The fact that they did a bullish harami right on the T-line tells us get ready for wave 3 on a positive open. So knowing the different signals and patterns, we know that this is kind of a double doji setup. In this case, a bearish double doji, which means if this opens lower tomorrow, after failing up here with a left-right combo at the 50, that you want to short it immediately. And when they failed the 50, where do you think the next target could be? Probably back down here to the 200. CNK, the bigger the signal, the more compelling, there's been a reversal. And Funko, if this opens lower tomorrow, you're going to have a bearish flutter kicker. Probably have the capabilities of coming all the way back down to the down to the 50-day moving average. Whoops, I went in the wrong direction. Wonder why that. Somebody was asking about this today. So if you've got something like this, it's a buy, but you got to look at what the nature of the trend has been. Not very active. And so there's your bearish doji sandwich, a bearish engulfing signal, a bearish doji sandwich, and a close below the T-line. It bounced off. Now, my moving averages are the 50 simple, the 200 simple, because everybody has those on their charts. The 34 EMA I've got on my chart because it works relatively effectively. And then the T-line, and then the 3T line. The 3T line works as a confirming indicator with the T-line, but if you see a buy signal and a close above the T-line and the 3T line comes up, that's just added confirmation you're heading in the right direction. And so here's the question you always get. Should you be buying here? And the answer is it could have more upside. This is Carnival. Should you be buying here, or should you have been finding places where the uptrend actually started? So if this is, you're kind of questioning whether you should be buying here because it's already had a good move, the answer is go back and find the signals and patterns that are just starting. So that's about all I got tonight. I've got a bunch more here, but we're way past. So here's a best friend, fry pan bottom breakout. And that doji gap up is your best friend. That tells you there's more upside. There's your fry pan bottom breakout. That tells you there's probably more upside. And what do we expect coming out of a fry pan bottom? A very strong price move. So You've got fry pan bottoms. You're looking for that strong breakout. Whoops. Is that what I just did? I guess so. And you've got J-hook patterns that are telling you've got sectors, like the retail sector, the oil sector. Goog, you're right here at the breakout level, and you did a doji. That makes it very simple. If you're long, you can stay long. But if it opens lower, tomorrow it's telling you they're not breaking out. If it opens positive, it's telling you you've got a doji sandwich breakout. LMND. No, because you're not really that far away. That's the first. That's kind of a morning star signal. I would expect a 45 degree. That'll give time for the T-line to catch up. Right now, there's your shooting star bearish engulfing signal. If it opens lower, you close it out tomorrow. And the reason for that is it's probably coming back to test the T-line, which tells you your trajectory now is more like this versus something more like this. And so anytime you're above the T-line, and that's referring to WWR, you stay long. Because as long as the fry pan bottom stays above the T-line, you stay with it. All right, let's see. We're way past time. I'll do a couple here, but I guess first question is there any general questions on candlesticks? DraftKings has to open positive tomorrow to stay with it. NVIDIA, just not going anywhere. You can see that this is just a sideways chart. I'd be someplace else. Blink, we're not in because it traded back below the T-line and hasn't come back up, so wouldn't be long Blink right now. And TRP, this one you can buy on positive trading. That's your that's a bobble breakout. And that's because it's supported, look how it's supported right on the T-line. If it opens positive, what do you got going on? A bullish doji sandwich. Fossil, you can get ready to buy this one on positive trading. Snow, there's not a lot of information yet on this chart. I guess there's enough. You could get ready to buy this one on positive trading also. Genco, nothing here. Would not be long or short. It had the opportunity to kind of break out through this level, and it failed. BB would not be in this one right now. Probably not until it came back up through this level. And soybeans, is still in a downtrend as long as they can't close it above the T-line. Look at your bearish engulfing, bearish engulfing. The Stochastic's still heading down. It might not be in a strong downtrend, but it's still in a downtrend. Wheat, kind of the same scenario. Bearish engulfing, bearish engulfing. It's still selling off. Sears or Sprint. Yep, that's not coming up. Yeah, Facebook has just never been a great trader. It's, I've never traded Facebook. It just doesn't have enough movement to it. HT, that one you can get ready to buy on positive trading. Sebastian, my suggestion is join the website for 30 days. We have the chat room open every day. I put out 2 or 3 stock picks every night with a video that shows why it's being picked. Or buy, go to the website and buy high profit candlestick patterns. That'll give you a lot of that information. Do stochastics heading down on WWR have any bearing? No. It's still the process of the fry pan bottom, just has one truism, that you just stay long as it stays above the T-line. CVS, kind of a slow fry pan bottom. You can be buying this one, anticipating wave 3. And apps, here is one of those where it never executed. Even though it traded up slightly on a day that it wasn't a real strong day, right now that's a nothing chart. Not until they can break it back up through that level. And Coop, there is nothing there. As a matter of fact, you might get ready to go short on that one if it opens lower. This one, did I do this right? PSLV? That must be traded. Oh, that's a silver. That's silver right now. Not really going anywhere. It did a big morning star signal. Now, if silver comes up through the 50, you can start buying. Gold, there was a morning star signal. It's still kind of heading up right now. SPWR finally closed out because there was your close below the T-line. And when it closes below the T-line, the probabilities go against you dramatically. You don't want to be holding on to something that has a sell signal and a close below the T-line. Canadian Solar, bearish left-right combo, bearish left-right combo. Which direction is this going? Right now, I wouldn't be long or short. You could go short, but then you just want to make sure it can get through this congestion area. OESX stays short. Yeah, there's nothing here to tell you there's a J-hook setting up. It didn't support. This is a good short with a prospect of it heading for the next support level. And Guild just has never been able to get out of its own way. I wouldn't be long or short this one. PLTR, that one you get ready to buy on a J-hook. I'd probably use trading above today's high. If it comes up through there, they're coming up above the T-line. And Snap, or Snaps, you could be buying this one. It has to get back up through this level. Apple is a hold. Have your safety stop at the T-line. And Peloton, if you like it, you can be buying it. I'd wait for it to break through this downtrend. It's just not real enthusiastic right now as a chart. And this one, Nautilus, I'd be ready to go short. This is what they call a blue ice failure, where it came down through the ice, came up, failed at the ice. Where's the next target? Down here at the 200. And ACB, one of the pot stocks, you could be buying this one. We've already started building up positions over here on this one because we looked at both of them, and the percentage return on this one was a little bit better. Is ET that's got a J-hook pattern. If you're long after the bullish engulfing right here off the T-line, just obviously watch to see what it does once it gets to the 200-day moving average. Okay, let's call it a night. You're probably going to see See this one recommended tomorrow because of the best friend gap up out of the fry pan bottom. And if overstock opens lower tomorrow, after this double doji, it kind of showed failure at the T-line, you could start shorting it immediately. So again, this is not rocket science. Investor sentiment works the same way time after time. Oh, man, kept us way over time. All right, everybody have a good evening. Again, if you buy, who is Santa and how do you get to the North Pole? Barry right now back up in Pittsburgh. On Amazon, just tell Abraham and he'll send you a free mouse pad. And then if you have liked the book, you might put on a good, a recommendation on there. But like my mother always said, if you don't have anything nice to say, don't say anything at all. So with that, everybody, have a good evening. We will see you bright and early tomorrow morning.